Hi everybody, this is Gary Demon Sentiment Timing, and this is our free weekly video report for Tuesday, February 13th, 2018. I hope you guys have been staying on the right side of the market and have put the shorting aggressively trade away for a little bit, and I'll go over some potential targets on what's going on, but also the reasons why we believe that the short side has come and gone, and it doesn't mean that the lows have to be in, but it's there's a lot of reasons to believe that we could head higher before lower. So really, the main thing that we're basing things on, it's the time period, and that's when Woody has his time periods where the market's either going to make a bottom or a top, and that is then backed by sentiment, and then we have technicals that try to predict where where this price can move or make that reversal. And it's like I've said, the main thing that we offer is things that nobody else can offer, and there's nobody else that does, where they combine the time, the sentiment, and the technicals in one newsletter, and it gives our members, a trading advantage that a lot of people don't have, because they're able to adjust their portfolios as the herd and the media are getting extremely bullish, like they were at the end of January. There was a lot of talk about this. We were just going to have a nonstop move up to 50,000 on the Dow or wherever. The market was never going to come down, and during that whole time, we were actually saying that this market's going to have a very hard drop, and that was based off of sentiment, time, as well as the technicals. And it took a lot of people by surprise, and it happened in a very fast manner. And now you can't really find too many people that are bullish on this market. A lot of them are telling you to just hang out, let this play out, and when are they going to get bullish again? When we're back towards the highs. It's just the way this whole thing works. And then they start sitting there telling people that they're dumb because you're looking for a top again, when they missed the entire move to the upside and jumped in at the end. And it's something that just goes on over and over again. And I kind of chuckle because our timing things aren't going to be right 100% of the time. But even when they're not right, it doesn't make the market either safe to short or safe to buy. And it just means that it's getting extended, but things are still looking for some type of reversal. So let's take a look at the sentiment part of it. So we knew that we had the time period coming in January that was looking for the top period, and it actually missed this by almost a week. And again, it's one of the things where, yeah, the time part didn't come exactly when it was supposed to, but did it make the market safer to be buying up here? Absolutely not. So we knew everybody was leaning and looking for this, this slingshot move to the sky, and from there we got the massive move. And you can see there's nobody that's really bullish on this market right now, and you can see even the longer term sentiment that has dropped way down into extremely bearish levels. So just having this information alone gives you a trading advantage that I would say close to 98% of the people out there don't use, because they don't know how to use sentiment. And you have somebody that wrote a book on it, has been studying it for 40 years, that's letting what this sentiment it means, and that's it's priceless in my eyes. So this is what was some of the stuff that went out today. Is the profile was for a trading low due near here. It was the 13th to the 16th. There's still some latent downside potential, but he shared with us yesterday. I actually said that we put out a little brief update saying that a lot of the let's say studies of the VIX and of sentiment was suggesting that there's very high odds that a low was registered on 2.9. So again, are we sitting there saying that the low is definitely there? No, it's just saying that studies that Woody has been doing, like I said, over the past 40 years, are suggesting that could be the low. But the market's going to do what it's going to do. But what it did do was we were advising our members on going all the way from last Friday that it's not the time to be getting aggressively short. And I put some patterns out, and I actually threw one out to you guys and showed you the pattern that I was following. And anybody that was shorting that market just got got wiped out right now. And they're, what are they doing? They're not sure if they should be shorting, because we're getting these whipsaw moves down and up. And if knowing what to expect and being able to have sentiment that's backing you, and then having technical patterns that are supporting it, it makes things pretty easy. So another thing he said, he preferred that this mini crash will be quick. So again, this started on January 26th, and it was only 2 weeks, and we took out a lot of points. And this was said from the beginning that it was going to be a very, very quick move, and it was a mini crash. And once this low is confirmed, how the markets are going to bounce, and I can't really give you the dates on that, but it will be a big tell, maybe a big opportunity. So we're at the time period where we're looking for a low. We knew the top period. We were suggesting the short side from pretty high up there, and it was a great trade. And now we were saying to look for a low. So this was this chart right here is going all the way back to February 6th. You can see that this was really the first drop that we had on it. And the reason why I'm showing you this, so the low, that one of the potentials that I had was this 2540 area, and this was being said when we were all the way up here, that this move could come all the way down and test a 200-day moving average and then head up. Now again, the preferred profile is that this was our wave 3, this was a wave 4, and we're going to make a wave 5. Now we still may have to head down lower, and if we do, we're going to come down to the 2400 level if these lows are broke. But my point that I wanted to show you was these targets were here all the way up here when we knew sentiment was at extremes. Everybody was looking up. We had timing that was looking lower, and we came and hit this target in 7 days. So that was that. Now the next chart I'm going to show you, I'm sorry, here we go, this was the potential. Again, this was on the 8th. So we came down, and what the projection was, we were going to make a wave B and then a wave C, and that will be our wave A. And what I was looking for, and I just put this as a double bottom on it, but we had to target where it was, but this was the projection as far as what I was looking for with the to give us a solid buy signal was bullish divergences, and we didn't have any in place. So this was that. So now I'm going to show you the reason why I was looking for the double bottom, and this is what I sent out on Friday, and this was showing you that we had, this is the S&P futures, that I was looking for a double bottom and then a shot back up, and from there we made the exact double bottom. So all this information was passed on to members before the market opened. And again, if you were shorting this move, and next thing you know, it we're some 100 points higher than where it was, you're not going to like being short. And these are just like I said, we don't make trading recommendations, we don't make trades for you. What we do is we give you the knowledge to make your own trades, and it's knowledge that not a lot of people have based on what Woody has done for the past 40 years. So again, here was the next pattern here. So I was looking at an A. Now the pattern was looking up. This was that bearish divergence. Look at it, exactly played out like that. And now what I'm looking for is a wave B that's going to come back up and test this 2730. So again, anybody that was shorting this big move down at the 2540 area, they're not really too happy right now, and they're not going to be too happy, especially if we come all the way up to this level. And if it does, what we're looking for, either a test of these lows or it could break. It would fit the profile, and that's it. So we know that this was an important low. We may not break it. If we do, then you just let price let you know when to start looking long. But once we get up to this level here, up to that 2730, I'm turning neutral. And if it breaks above it and then and it's used as support, that's when I'm going to go long, and I'll then believe that with the, that we're now making that wave 5 to the upside. So again, that is kind of how we use the the timing, which is the the technical timing indicators that predict when to look for the reversal. Sentiment is giving us the which way is everybody leaning. Are they leaning bullish or bearish? And when everybody is leaning on one side, typically that's the time to look for the reversal. And then we have the technicals to to try to look where these reversals will take place. And if we just take a look at the S&P, this was a downtrend channel I've been showing in the video reports. We're through that. So the options are this: either we're going to come down, test this low at the 26.36, and then head higher. If it gets taken out, then we're probably coming down someplace into the 26.13 area. So the pivots that you want to watch is if we break above the 26.70, we're going to have probably a very quick move up to the 27.04. If we break below this 26.37, we're probably coming down to the 26.14. So it's giving us guidelines, and we know what to be looking for. And this market is one thing that I had said to you guys was I like when we have volatility, because you can make money on the downside and you can make money on the upside. And the ones that were just, oh, I know what the market's doing and it's just going up and just trade long, they're probably out of the market right now and not trying to figure out how their trading account just got wiped out by 50% or 40%, whatever it is, because a lot of them leveraged and were leveraged, so they got wiped out on that. But if you know what to expect, you're able to position your portfolio. And even, let's say you were long the market up there, you can buy some VIX calls or something just to hedge your trades. Or when it's going down and you're short, you can, buy some VIX puts. Whatever way you want to hedge your portfolio, you can do it. But knowing where to expect the lows, when to expect the lows, and then more importantly, what the majority are thinking, because most likely the market's going to do the opposite. That's really the trading information that you need. So with that, enjoy the rest of your week. Have a great Valentine's Day tomorrow, and I will talk to you guys next week.